Hey everybody, Smart Silver Stacker here. Over the past month, the spot price of silver has dropped quite a bit. We've seen a sell-off in markets across the board, and silver was not exempt from the beatdown. In April, silver was trading over 26 bucks, and now we're less than halfway through May, and it has fallen to under $21. So what gives? Why is silver falling? Isn't it supposed to be a hedge against inflation like the 8.3% year over year CPI print we just saw? Isn't it supposed to be a hedge against geopolitical instability like the nascent World War III over in Eastern Europe? Wasn't silver supposed to moonshot by now? I have been hearing you YouTube stackers say the same things about silver for over 10 years, and I'm sick of it, and I'm going to sell all my metal right now at the lows for a loss. Oh, sorry. I was just thinking of some of the comments I've been getting over the past couple days. Yes, the paper spot price of silver has been crashing, and there's a very simple explanation for that. It's because when other assets like stocks and cryptocurrency are absolutely tanking, as they have been, silver and gold get sold too to raise liquidity. Investors need cash to satisfy margin calls. Gold and silver are extremely liquid, so selling paper gold and paper silver is an easy way to raise cash. And I think that pretty much explains the drop we've had. But I have a question for you. How much of the silver that was sold over the past month, driving the price down, how much of that do you think was actually physical metal? I'm not sure there's any way to know for sure, but I doubt very much that any meaningful amount of it was real physical silver. It was all paper. Because the market for physical silver is still extremely tight. And if it was physical metal that was being sold, it wouldn't be. We would have seen premiums come way down. In fact, if you're holding physical metal, you really haven't even lost that much. Let's take a look at what physical silver is selling for right now.
All right, and we are going to take a look at some physical silver, but first I do just want to say a big thank you to today's video sponsor, Silver Botanicals, household and personal hygiene products that utilize the power of nano silver. Head over to silverbotanicals.com today. There's a link down in the description. And don't forget to use coupon code STACKER to save 10% off your order. All right, and to see what the price of physical silver is right now, we're going to take a look at some completed sales on eBay. And I don't necessarily recommend buying or selling silver on eBay. It's just that we can see all of the transactions on eBay in real time as they happen. And it is a real market with real money changing hands, and you can sell your silver on eBay. So it's a useful tool for determining the going rate for physical silver. Because remember, the spot price is just the price of a paper futures contract. So first off, if we take a look at the 2022 Silver American Eagle, we can see that an individual coin here is selling for about $38, $37.99. And then, if you buy in volume or you sell in volume, you can see here that rolls of Silver Eagles with 20 coins are selling for $690.21. And again, this is a completed sale. This is not a listing, so we know that buyers are paying that amount for Silver Eagles. And if we do the math real quick, we can see that that comes out to about $34.51 per troy ounce of silver, if it happens to be in the form of an American Silver Eagle. Next up, we've got junk silver. So here you can see that just today, a roll of 20 circulated 90% silver walking Liberty half dollars sold for $217.52 plus shipping. And so to figure out the price of this one per troy ounce, we've got to divide the price by 10 because there are $10 face value of junk silver in there. And then we divide that by 0.715 because each $1 face value of junk silver contains 0.715 troy ounces of silver. And you get a price of $30.42 per troy ounce if your silver happens to be in the form of physical 90% junk silver. And then finally, we'll take a look at these 100-ounce silver bars, and you can see these Scottsdale silver stacker bars selling for $24.50 per troy ounce. And also, you notice that the 10-ounce stackers, just to point that out, they're selling for over $25 an ounce, even if you're buying them in bulk. And then here's this somewhat more generic JBR bullion 100-ounce silver bar that just sold for $23.48. So $23.48 per troy ounce for generic 100-ounce silver bars, well over the spot price. And, that is something to pay attention to because even though this doesn't seem like a super low premium, this is on generic 100-ounce bars, typically the silver bullion product with the absolute lowest premium possible. And you can see that you can still sell those for about $23.48 per troy ounce.
Okay, so you can see that the price of physical silver has not fallen nearly as much as the price of paper silver. And this is exactly why we stackers are not really that interested in the paper stuff. Paper silver is a derivative that can be manipulated. It can be created out of thin air. It does not have the properties that make physical silver so attractive. Here's an old form of paper silver for you, a US silver certificate. But guess what? You can't trade this in for silver anymore because with paper, the rules can be changed. And guess what? They're never going to be changed in your favor. And listen, this isn't financial advice, and I know you're probably sick of hearing me say this, but to me, this pullback in metals is just another opportunity to stack some more physical at a lower price. Because even though the market in physical is tight, there are still some deals out there. And if you know where there are some good deals on physical right now, please help all of us stackers out and put them in the comments. Because listen, nothing has fundamentally changed in the economy. We don't stack silver for a bear market in stocks. We don't stack silver to trade and flip it for a quick profit. With physical silver, each ounce is like an anti-debt unit because that's what we stack silver for, folks. A crisis in the debt market, a crisis in the currency. And we're not there yet. After the sell-off that we've had over the past few days in markets, look, the 10-year yield is back down under 3%. We are not at the terminal phase of this thing just yet. But again, nothing has changed. The national debt is still over $30 trillion. That alone should tell you that things are not okay. That level of debt, it cannot be paid back, not without massive austerity and terrible economic pain. So guess what? It's not going to get paid back, at least not in dollars with anything like the purchasing power that they now command. And there are plenty of pins out there ready to pop this gargantuan debt bubble, and when they do, the dollar is toast. Just remember that with $30 trillion in debt, each 1% increase in rates is another $300 billion in annual debt service. You see, rates rise too much, and suddenly debt service becomes the biggest item in the national budget. And the Fed will never allow that. If we see rates on treasuries begin to spike up, they will do whatever they have to do to keep the rates down. They will come into the market and they will buy as much as they need to, creating the dollars to do so out of thin air. And there are signs that we are approaching the terminal phase in this fiat currency debt experiment. Look at the trade deficit in goods. It just exceeded $100 billion per month. The rest of the world is only going to continue to accept dollars in exchange for real stuff for so long. Look at inflation. It continues to move much higher despite a CPI that significantly understates real inflation. We even had Wang Yongli, a former vice president of the Bank of China, recently described China's US Treasury holdings as financial nuclear bombs. And if China was to unload their treasuries, that could absolutely spark a dollar crisis. The point is, the system we have is becoming more and more fragile by the day. And at some point, possibly soon, we'll be facing a much bigger crisis than a stock market crash. And before that happens, you want to get your hands on some real money. And yes, it is true. Stackers have been saying this for a decade or more. But you know what? It's been true all along, and never more so than today. And it is true, given the benefit of hindsight, clearly it could have been more profitable to invest in other assets besides gold and silver over that time period. But the thing about a bubble like the one we are living through, you never know when it's going to pop. And when it comes to getting prepared for that, it is better to be 10 years too early than 5 minutes too late. So, what do you think? Is this decline a buying opportunity, or are you done with precious metals for good? Let me know in the comments down below. Thanks for watching, everyone. Don't forget to like, comment, and subscribe. Smart Silver Stacker, out.